everybody. Welcome to the Closing Bell. I'm Maria Bartiromo, once again live outside. Beautiful day in New York City, outside of the New York Stock Exchange, right here at Federal Hall on Wall Street. My partner Dylan Radigan is on assignment today. We have a market that is holding on to gains. It is the third week of summer on the street here on the Closing Bell. We're going to be out here on Friday afternoons bringing you the latest on Wall Street, and we have a busy program lined up for you tonight. We've got PIMCO's Bill Gross with me, joining me to talk about interest rates. He is our guest, along with some big market watchers as we take you into the weekend and look ahead to next week on a day that we have the market up about a fraction. Take a look at trend investment strategy, a boost. The stock up 2 1/3%. Meanwhile, while crude and most other commodities continue to slide, investors are looking to cash in on that next big move, a rally they're hoping. Looking into the future now of commodities, joining me now to talk a little more about that is Phil Dodge, energy analyst with Stanford Group, and Kevin Kerr. Good to have you on the program. Welcome,
Hi,
gentlemen.
Maria. How are you?
Kevin, let me kick it off with you and ask you if you believe this move downward. Is the story still in place for a move upwards for commodities, or do you think we've seen the highs?
Well, I think we've seen the highs temporarily. I think this pullback was expected by many of us who've been trading these markets all our lives, and the correction has been significant. So now we have to look at it and see where is the actual fundamental value for these commodities. And some of them are clearly oversold. Some will have probably further to go.
Phil, what do you think?
I'll just talk about oil to begin with. The last notable peak in oil was at $40 in 1980, and it took more than 20 years to get back above that peak. I don't think it's going to take as long this time, but what's driven oil lower are really two things: slower growth in demand and higher production in Saudi Arabia. And I think those will be going on and only reversed when OPEC and Saudi Arabia cut production.
Okay, so you're saying it could be several years before we see $148 a barrel again for oil?
It could be 1-2 years, possible.
So then what do you want to do from an investment strategy? Should I be betting that oil prices stay where they are or go lower?
I think they're going to go lower over the near term, below 100, maybe below 90. And so during that time, if it happens, I would avoid companies that are sensitive to oil and gas prices and focus on some of the energy companies that are not. We actually have positive ratings on 3 companies like that: Wilbros Group, which is pipeline construction; Golar, which is liquefied natural gas shipping and regasification; and BG Group, which has just participated in an enormous oil discovery offshore Brazil.
Kevin, it sounds like you're on the other side of that trade. Is that right?
I am. I think, honestly, I think a lot of this commodity pullback is based on the dollar strength. We've seen the dollar strengthen here. We've seen commodities pull back from, really, again, oil above 120 for many of us who've been trading this for years seemed insignificant. So below 120, we're in the range we should be. It's really dollar-driven. If the dollar continues to strengthen, we'll probably see commodities pull back, including energy. If we don't, then we will see commodities continue to rise. There's strong demand worldwide. There's no doubt about that.
And so soft commodities, you think they'll perform well into 09?
I do. Yeah, the soft commodities and the grains, I think, are underestimated here. The commodities in general have been like the baby with the bathwater, thrown out the window. And the grains, the corn back down to 5, the soybeans pulling back so hard. Honestly, until we get the harvest in for the grains this year, we're not going to know what we have. And they've come back long and hard here. So I would take a long look at getting back into the grains at this point.
Are there any ripple effects, Phil, from your call that oil prices will go lower from here? What kind of an impact might that have, do you think?
Well, generally good. There are a lot of people that buy oil, and they will benefit. So I think there are some other sectors that will perform well as a result of this.
And the move today down $1.30, we had been down much more than that, down $3. It's really been quite volatile for oil, but a sharp move on the downside from the highs, that's for sure. Gentlemen, good to have you on the program. Thanks so much.
Thanks,
Maria.
We'll see you soon. Thank you so much. We've got the Dow Jones Industrial Average up about 30 points here with about 30 minutes to go before the closing bell sounds on Wall Street. NASDAQ is negative here. Money coming out of technology.